Hey there, Dan Geltrude here, and welcome to another thrilling episode of Token Money Magnet, the show that puts real value in your hands. You know how every episode of this show gives you free tokens, right? But have you ever wondered what these tokens actually mean? Why are we tokenizing our episodes? Think about it. When you tokenize something tangible, like real estate or gold, you're creating digital tokens that represent physical stuff. You could see it, you could touch it. Today, we're exploring something even more revolutionary: tokenizing intangible assets. These are valuable things that you can't physically grab, like intellectual property, carbon credits, or even this very episode. And that's exactly what we're doing with Token Money Magnet, turning passionate viewers like you into actual stakeholders. Every time you tune in, you get tokens that give you real ownership of this show. Carbon credits are good examples too. They're being turned into tokens to make it easier for businesses to go green while creating new investment opportunities. Inventors and creators are turning their patents and copyrights into tokens, meaning you could own a piece of the next big innovation. Now, to help us understand all this, we have a couple of amazing guests joining us today. First is Sean Lee, a digital economy visionary who's been riding the tech wave since Internet 1.0 in the mid-90s. As a Forbes contributor and digital asset policy advisor, Sean has helped build innovative projects across various countries and brings a unique global perspective to our discussion. Joining us as well is Erik Duong, a startup incubator founder who manages a venture capital firm focused on blockchain and Web3. As a Web3 product manager at SAP, Erik develops blockchain solutions serving millions of business-to-business customers while actively scouting promising startups in the space. So, Sean, as we explore this exciting world of tokenization, where movie fans are becoming investors and carbon credits are opening up new opportunities, talk to us about why tokenizing intangible assets is important.
So thank you very much, Dan, for inviting me on the show. Really glad to be here. You know, this is a very interesting question because especially the fact that you talk about these are intangible assets, right? Not the tangible ones that we're typically very comfortable with and see every day. So intangible assets very often are already, very often already digital in nature. So how do you actually own it from a perspective of true ownership or fractional ownership becomes something that's very critical, where tokenizing those such assets can potentially help you gain access to these very unique pieces of information.
Yeah, I would agree with that. So, Erik, several countries like the US, India, Canada, and China are implementing carbon pricing mechanisms to reduce greenhouse gas emissions. Given these initiatives, how can tokenization of carbon credits enhance the efficiency and transparency of these diverse carbon markets?
I think there are two main aspects when talking about tokenizing, such as carbon credit. First and foremost, it is transparency, as you mentioned. So previously, we know that, for example, like you buy an airplane ticket and they charge you something like CO2 commission, but you have no idea where it's actually going to and whether actually it is being deducted or not. For example, an airline can say they bought like, 10,000 carbon credit and they say they deduct it all, but we have no idea how to check that. With blockchain technology, with real-world asset platform, with tokenization, we can actually track how much businesses actually buy carbon credit and how much actually burn. So that is something we call proof of burn, which is common term in blockchain in general. The first one. Tokenize is about decentralization, which means me, you, anyone, any retail investor can actually make profit in terms of, let's say, investing in such token, while also contributing to the, let's say, a greener and better world in general.
Ever wonder what your laptop and a famous brand name have in common? They're both assets, but of different kinds. Let's break down the difference between these assets, tangible and intangible assets. Tangible assets are physical things you own, like building or cash. Imagine owning a piece of real estate represented as a digital token on a blockchain. Then you have intangible assets. Can't physically touch these? They're valuable ideas, rights, or reputation. From physical property to intellectual property, Web3 is redefining asset ownership. Explore tokenization to understand new financial world order.
Now to you, Sean. We're starting to see tokenized creative works, but what about complex things like patents and software licenses? How can tokenization make licensing more flexible and adaptable to market changes and international regulations?
So the notion of these patents and digital information that are living on the blockchain, fundamentally what you need to enable them to do is have some notion of a way that you can actually authenticate who have actually created them and by what time, and also a number of critical informations that can validate the ownership and the creatorship of these pieces of information. So that becomes a critical element to keep on the blockchain.
And Sean, I'm gonna stick with you here and ask you another question. So many countries are working on digital IDs. Can these IDs be universal? And if so, could it also provide protection for creators and innovators worldwide to avoid plagiarism and establish ownership?
Oh, totally. I mean, the notion of having digital IDs, or in the blockchain sense, a decentralized ID, is absolutely critical, right? Because at the end of the day, you want to make sure that the assets that where the ownership are actually transferred are actually indeed transferred from one identity to another. Now, the question then becomes, where are these identities being aggregated from? And how do you actually know whether the underlying identification is indeed something that you can trust, right? Because at the end of the day, when it's digital in nature, and we're talking about digital identity systems that are global in nature, then so there's lots of technologies and lots of capabilities being built in this space. And this is, quite frankly, one of the fastest growing area in the world of Web3 that Erik and I are both in, where we're seeing the need for decentralized identity solutions that are attached very critically towards tokenization projects.
Ever wonder how intangible assets like patents or music rights can be traded like stocks? Tokenization uses blockchain to transform these valuable non-physical assets into tradable digital tokens. This creates fractional ownership, making valuable assets accessible to everyone with enhanced transparency. From music royalties to patents and data sets, tokenization is reshaping how we invest in ideas. Tokenizing intangibles faces challenges, but offers tremendous potential for a more accessible financial future.
So, Erik, as AI generates more content, determining ownership and ensuring fair compensation for creators is becoming increasingly important. Can tokenization through blockchain technology provide a transparent way to establish ownership rights?
So, as you might already know, back in 2018 to 2021, we got the creation of NFT, which is non-fungible token, which somehow answer the question regarding the ownership of the patent. Like every NFT sale creating royalty to the owner. So that's already a way we can somehow see how blockchain technology can protect and also giving the benefit to the owner.
Okay, and to you, Sean, what's your take on how tokenized assets could be used as collateral for loans?
Yeah, Dan, I mean, we are seeing quite a few of examples of this already happening in the markets. I mean, those of us that kind of work very closely with traditional financial institutions have already seen the likes of, Franklin Templeton, Fidelity, UBS, and others that are tokenizing traditional financial products, things like US Treasury bills and money market funds. And then, of course, making those available towards the Web3 community to be used as collateral for loans and other type of decentralized finance type of applications as well. So that's a very clear indication in terms of the ability for tokenized assets, especially in the form of financial products, to be able to be used as a kind of bridge between the traditional financial world, the traditional financial systems, as well as the Web3 world as well.
Sean, as digital currencies become more common and blockchains connect, how can we integrate tokenized assets into the broader financial world, enabling seamless transactions across different systems and countries?
So I think there are some technical hurdles that needs to be overcome first. And when I say the word hurdle, these are not technical complexity. These are actually a willingness to do these things. So first of all, when we talk about these tokenized assets, many of these assets need to be on public permissionless networks. The reason for that is so that you can increase the accessibility of these tokenized assets to a much broader community and potential investors to look at, right? If you put them on private networks, which is where you see a lot of the earlier experimentations are, it becomes very difficult to do. So that's the first thing. The second thing is, once you start to have these tokenized assets on the blockchain, then you naturally need a digital currency to actually transact with them, right? You can't exactly just swipe a credit card and buy something that is on a blockchain. You need a money that's on the blockchain. And those live in many different forms. The most common form is in the form of a stable coin. And these stable coins could be pegged to different currencies, but these stable coins are essentially digital money that live on the blockchain specifically for the purpose of transacting with tokenized assets, which are what are some of the things that we talked about earlier. So I think these are the common and the technical kind of hurdles that do needs to be overcome, because as we have more tokenized assets on chain, then you need more tokenized digital money on chain so that you can effectively make that completely seamless, transparent, and more importantly, increasing access to the overall broader community.
Erik, with growing concerns about data privacy like GDPR in Europe, how can we tokenize assets in a way that respects these rules while still allowing secure and verifiable ownership and usage?
Two ways. Easy way is do not tokenize the data that you are not allowed to. So probably you need Europe, go to the other country like in South Asia, in a part where the data and the privacy is not as strict. But another way, technology. At the moment, I know a lot of teams, and we also currently working with several teams who try to tokenize things, tokenize private data, but in a way that do not violate the government rules. Obviously, you probably heard the word ZK a lot, right? Zero knowledge proof a lot. But that would be something can support the process of tokenizing personal data without actually violating the government rules in general. But simple way to do that, just do not violate the rules. Go to the place that's easier to do so.
So, all right, time now for some audience questions. So Sean, this first one is for you. When carbon credit is retired, it indicates that it can no longer be traded, suggesting that it's lost its value. How can blockchain tokens still derive value from these retired carbon credits?
That's an excellent question, Dan. So you have to look at value in terms of how you define value. There is market value, which is what you were referring to. And when these carbon credits expires, obviously the market value diminishes, towards the market. But there is also value in terms of the proof of these carbon credits or these certificates that actually existed in the first place. Many of us in the industry call that the proof of impact, right? These carbon credits obviously are there, from an impact perspective. So just because they have retired doesn't mean that they don't have tangible value, and that tangible value is the fact that these carbon credits did exist in the first place and were in the market. Now, funny enough, though, that a lot of investors and a lot of collectors, I would say, are also very fond of collecting these retired carbon credits as well. Again, as a form to kind of showcase the verifiable, notion that they were owners of these carbon credits, and obviously they did contribute from an impact perspective. So, drawing on the notion of the verification, the transparency, and also the audit trail that are inherently available from a blockchain technology perspective, these type of carbon credits, even though they're retired, may not have market value, but they certainly still have value from a blockchain ecosystem perspective.
Okay, our next audience question is for Erik. I love our audience. This is a great question. So Erik, can I tokenize my gym membership because I'm not using it right now? Sounds like a question I'd ask. So what do you think, Erik?
Yeah, I also like to token my gym membership either. I bought my gym membership for 3 years and I haven't used this for like 6 months already. Too lazy. But to be honest, you can actually tokenize everything. But back to basic, also mentioned with Sin as well. What is the utility, the value you bring to the end user, the purchaser actually matter, right? So yeah. At the end of the day, you can tokenize your membership card. And if you know any product or platform out there actually do so, please tell me. I still need to tokenize my membership as well.
So Sean, over to you. Goodwill is unique because it represents the excess value paid during a company acquisition and can't be bought or sold independently. Can Goodwill be tokenized and distributed in the same way as other intangible assets, or are there regulatory or practical limitations that make this challenging?
So, as Erik mentioned, I mean, you can tokenize anything, right? I can tokenize the chair that I'm sitting on, right? But whether that represents value and any kind of tradability is kind of the key question here. I mean, from a Goodwill perspective, when you think about Goodwill representing intangible factors such as, sometimes our brand reputation and customer relationships and so on and so forth. I mean, these are inherently difficult to quantify, right? So even if you're able to tokenize it, what exactly are you tokenizing? What units and what KPIs are you actually wrapping into these tokens? And does it really have any independent value aside from the company that you can actually wrap together? So I think that becomes very, very difficult to do. It's such a touchy feeling type of thing, right? And also from a regulatory perspective, again, when we talk about tokenizing assets, many of the examples that Erik and I talked about before, a lot of these are typically represented in finance. And there are very specific kind of securities laws or commodities laws that kind of govern how these type of assets, whether they're tokenized or not, can be exchanged in value and exchanged in ownership. But when you look at things like Goodwill, then what exactly does it fall under, right? It's not exactly financial products. Like I said, there's things that are very difficult to quantify. So there, it comes with a lot of kind of regulatory issues. So, if I were to answer your question, can you tokenize Goodwill? Someone probably will figure out a way to do so. But is it really applicable and is it really realistic? I think just given some of the things that I mentioned before, I believe it's quite difficult.
All right, this segment happens to be my favorite. Rapid fire questions. So Sean, we'll start with you first. Digital identity tokens or reputation tokens? Which becomes mainstream first?
Digital identity tokens, no doubt.
If you could tokenize one personal skill and trade it, what would it be?
Language skills.
Which country will lead the tokenization revolution?
If it's financial products we're talking about, the US. If it's anything else, other type of assets, China.
Okay, Erik, now it's your turn. On a scale of startup incubator thermometers, how hot is tokenization right now?
I think they're second hot, just right behind the recycle.
You must pitch tokenization to your childhood self. In 10 seconds, what's your hook?
Just buy it. You want to lose money, but you will learn a lesson.
If you could tokenize one failed startup idea and give it new life, what would it be?
It would be the digital camera.
And that's a wrap on our deep dive into intangible asset tokenization. Thank you, Erik and Sean. Your insights today have been absolutely game-changing. While we've been breaking down these complex concepts, your tokens have been stacking up real ownership in a show that's redefining value itself. Join the conversation and keep those tokens flowing. This revolution isn't waiting for anyone. I'm Dan Geltrude. See you next week when we push even further into the tokenized frontier.